nobody likes to hear me say bad things, so please refrain. But if you are a realtor and have a question, you can use the hand raise motion, and or not motion, but the hand raise button. And we'll pull you up here on stage and let you ask your question live, or you can put it in the uh, chat box or the
Q&A, Q&A box.
Q&A. I don't see. Oh, there's the Q&A box. I'm like, oh, they moved it. And so, yeah, you can put it in the Q&A box, and we will answer them as they come in. Having said that, we have Mia here is our technical director. We'd say she's behind the scenes, but she's actually right here in front of us, so she's not behind the scenes. But as always, thank you, Mia. And Brad from LO Support is here with an awesome awesome presentation of the DSCR loan. So having said that, Brad, take it away.
Well, glad to have everyone here. This is one of my favorite loans, especially when you get any type of compliance from your borrowers, because what many times can be a 21, 25, 30-day process on a normal full doc loan, these DSCR loans can close in 12 to 14 days, including getting the appraisal. I had 2 of them last month, working on another 2 already this month. So I really like these loans. As you are very likely aware, there are more and more people that are getting very excited about owning real estate, but their income isn't necessarily going up from where they're working. And sometimes it is just a nightmare. It is nothing but brain damage, heartburn, and everything else trying to get the documents for a full doc loan. Many times the pricing, the way they are priced with traditional Freddie Mac and Fannie Mae loans, are going to be very similar to the product I'm going to be showing you and talking to you about today. Now, the DSCR loan stands for debt service coverage ratio, and all that means, it's very simple. It's a long acronym for saying, does the house income equal, or is it more than the PITI payment for the house? If it does, that's all we care about. We don't need income or pay stubs. We don't need tax returns. We don't need any of that stuff. We just need the assets. We need to know what the rent is. And there's a couple of ways I'll talk to you about those as well, that we're going to get that. Does that rent received cover the mortgage payment? If it does, borrower qualifies, and let's run to the closing table, finish this up. Everybody moves on to their next opportunity to do another loan or sell another property. So with that in mind, I'm going to want you to ask questions, but I'm going to give just a little bit more information on that. How are we going to determine income? It's going to come right off of a couple of different forms. Well, let's use forms. One of which will be the market rent survey on the appraisal. So you're going to get a standard appraisal that says what the value of the home is, and you're going to get a market rent survey. Realtors will know that as your comparative rent analysis, but that's going to be on an appraisal form that's going to tell us, if this home is rented, what is it likely to get on a monthly basis in that particular market. One of the good things about this, though, too, is many of our lenders, many of our options will allow us to do short-term rental income. So those of you that might be buying homes on beaches or in high summer traffic camping vacation areas where you're going to be renting Air BNB, VRBO, however you're going to be getting those, once you determine that, there is a way to find out what that's likely to come in. That 1007 generally won't have it. You will use Air DNA, and it will give you an idea of what that property is going to rent for. Many times the short-term rent is going to get you more money than the long-term rent. And many of my investors that have used this have used it to buy properties and now create wealth, nearly generational wealth, just by the real estate that they're owning. With that, I'd like this to be more of a question and answer. Let's participate. If you've got questions, please feel free to ask, and I will be glad to answer any questions that I have for you.
So typically, the down payment would be higher on these type of loans. Is that correct?
Barely. I mean, you can do, let's say it's a single family residence or a condo. If you wanted to do a traditional Fannie Freddie loan, you could do it at 85%. I'm not sure why, because you're going to have, mortgage insurance on it. And those rates are scary, ugly, especially compared to DSCR rates. So if you do it at 80% LTV investment property, you can do 80% on a DSCR. Ladies and gentlemen, there are even a few of our options that will do the same 85% LTV on a DSCR loan, and there's no mortgage insurance on it. So you do have a select few of those available as well.
Okay. Reserves.
6 months if it was a Fannie Freddie loan, 6 months if it's a DSCR loan. This is an easier loan all the way around with much of the same requirements, except you don't have to verify all your income.
Can I do a primary residence?
You cannot. It needs to only be investment property. No second homes or vacation homes, no primary residence. But if you're looking to build an investment property or rental home portfolio, this is an easy and quick way to do it. In fact, when you're out there, when your borrowers or your buyers are out there looking, use this. Don't sell the short close, but know that if you happen to have and you're competing with other offers, this loan will actually help you win deals and close faster.
Very cool. I see there are no questions. So you've said
Here's something else I forgot to bring up, and I want to bring this up. How many realtors out there have buyers that want to buy? Now, some of us are in Phoenix, and finding a duplex is kind of like finding a unicorn, and a fourplex is kind of like looking and finding the Holy Grail. But in communities where you have more of them, simply because Phoenix is a single family residence town, but in other towns where you've got 2, 3, and 4plexes available, you can actually use these for investment property purchases where you are going to basically be printing money. These are very likely to cash flow very well, and you can do these on this program as well. It isn't just single family residence and condos.
So we have a question with income properties under rent control. Is the income and I'm going to kind of interpret this as, what are they going to use for the rents? Are they going to use the 1007 or are they going to use the actual rents?
My bet is, simply because it is rent control, that the 1007 is very likely to reflect that, and they would go off of the rent control formulas of what that rent is going to be.
Right. So
because that's what they're going to be able to charge.
Especially if it was currently rented.
Exactly.
They're going to see, hey, it's rented at $550, even though market rent is. Now, in most of these rent controlled areas, and I'm going to make, I'm making an assumption here that I probably shouldn't, but is the rents being supplemented? I don't know if that's the right word, but
You mean like Section 8?
yes.
With a Section 8 or a government or rental assistance, yes, you're going to get credit for the full rent that is going to be paid or collected for that property. Although the borrower may be only paying a short or a smaller portion of it, you're going to get credit for that, which is supplemented by the federal program or state program.
Right. Okay. I know the answer, but I'm going to let you answer it. Money down, can it be gift?
A portion of it can be, yes. And you could use some of the funds for closing costs if it is a gift.
Right. My experience is that the reserves cannot be gift at all. Those have to be borrower funds only.
Those have to be borrower funds only. Here is a twist. Some of our investors and lenders will allow you to use 401k. So while you're not using income and you're not using assets that are associated with your, well, you would never use assets. Well, if you were a business, let's say you were self-employed, but while you're not using income from something where you've got a 401k, some of our investors will allow you to use even 401k funds for reserves. Some
Right.
will not.
And
So,
it needs to follow the same Freddie Fannie guidelines
right.
as far as, what you could actively withdraw and that kind of stuff.
Right. If you've
So
got loans or anything else hindering it.
you're gonna have to
Exactly.
jump through a couple extra hoops with that. I can tell already we're getting a lot of LO questions based on the questions about they're out. How much reserves in general? Well, if you were here for the first 10 minutes, you would know the answer to that question, but it's generally 6 minutes. See, this is where you make me be mean to you.
6 months reserves, just like Fannie Freddie, DSCR, 6 months reserves.
No, the
Yes,
lease,
yes.
if you have a lease on the property and is it month to month, I'm going to generally say that an investor's not going. The reality is they're not going to use the lease income anyways. They're going to use the 1007 income or a third party verified lease. They're not. Yeah, I've done many of these and always had to have a 1007
Yeah, always.
versus the lease.
I haven't found in any case where in my DSCR loans where I didn't have to have the 1007. Now, if it's a short term, if you're going to be using it as a short term rental and you get the 1007 and it's less, most of our lenders will allow you with the short term rental to do that. Now, given this is mostly realtors in this room, it probably isn't going to behoove me until they become our customers. But when you do these on a refi basis, and you're renting them short term, if you or your borrower have proof of established short term rent in that, I've even had those go without a 1007, and we work right off of a formula of gross rent received for the year minus 20% for expenses. And oftentimes they will still cash flow enough to make these loans work. So in the future, and for cash out, I mean, if you've got investors that are looking to buy more properties, have them look into, maybe they've got the equity, have them look into doing a DSCR loan with your NEXA loan officer, get that done very quickly, and then get those funds for the next purchase.
So, and here Melinda wants me to be mean to her because I'm pretty sure this is a question from a loan officer. Is the DSCR a TRID loan? No, it's not.
It is not.
What's the maximum points you could charge? Well, I would get with your next loan officer to answer that question.
There you go. Very lucrative loans for your NEXA loan officers. So if they're not doing them, find out why and get them started.
Find another NEXA loan officer. No.
Kidding,
No,
jokes.
Raul, the answer to your question is that's not why you're on this webinar. You had a webinar for loan officers last Thursday that the reality is that's why we do two of these. We do one for loan officers that is very in depth, that covers all of this. This is for your realtors to come in and realtors, my apologies, to come in and add something new to their toolbox. And so, my
But
apologies.
loan officer support is available. Come in and talk to us about
My
come into any
apologies,
of the rooms
Raul.
and we'll coach you right through it.
Yeah.
So realtors, another thought on this, as we're always looking for these options of how we're going to get more business, think about finding whatever it is. It could be meetup group of investors, of just real estate investors. Go to Chamber of Commerce or work within your own realtor associations to work with other people that may know how to get in front of those realtors, because real estate investing has been a big thing over the last decade. It hasn't slowed down whatsoever. Everybody's trying to find places to put their money in and gain more equity. Real estate seems to be a safe investment for most years. It's an opportunity for your buyers to use their funds in ways that maybe they're not finding the returns elsewhere. It's mailbox money. It's equity that they're going to get. Try and find a way to get to those investors. Like I say, whether it's a meeting of real estate investors, whether it's a Chamber of Commerce, your real estate associations, it's hard for realtors to get into them, but BNI or mutually exclusive, or a very exclusive one member per industry type of associations like BNI, where you've got those referral programs, but find a way to get in front of those investors.
Yeah. Raul has another question. What types of properties can work? He's got a client that wants to buy a small apartment complex.
You can do those 1 to 4 unit work well. There are some that will do those on 5 to 8 units. If it's a more than an 8 unit property, that's going to be a true commercial loan. The 5 to 8, I will tell you, the only real requirement for a 5 to 8 is that they need to be experienced in owning and operating 5 to 8 unit properties. They don't like the DSCR to be the borrower's first foray into that type of a multi-unit property. But if they've got experience, then yes, you can do that.
Good answer. Condos are okay, right?
Condos are okay, sometimes even non-warrantable. So we can look at that. It's all going to depend on our multitude of choices of lenders and investors that we go to. But yes, condos are fine, at times even non-warrantable condos.
And the non-warrantable part of that is dependent upon why it's non-warrantable.
Correct.
So something that has litigation on it is generally going to be a problem no matter what. I've lost deals because of litigation on the actual property. So, be cautious of that.
But if it's a situation where the condo project maybe is a little more heavily renters than second home and owner occupied, those can still be done.
Yes.
Budgets are always a concern, but if they're not necessarily hitting the high water mark on budget, but they're not necessarily, let's say, in the red, if they're not negative, if they can still pay their bills, just may not have the reserves or some other thing may be coming in, let's take a look at it, because there are those options.
Yes, absolutely. Manufactured homes.
The last I looked, I didn't see any, but I still believe they're out there. I just didn't find, the last time I had one, I didn't find the right lender. We do have quite a few. We're probably looking at close to 80 or more DSCR lenders, people that do something like it. So that wouldn't be my first choice on a manufactured home
yet. I haven't found a manufactured home DSCR yet.
Yeah, I haven't found it, but I believe they're still out there. There's somebody that would do it.
Yeah.
But
how long until they can refi? Typically, there's going to be a prepay. You can buy it down to generally 1 year without, with some additional costs, of course. Or you could buy it out entirely, but then your cost goes up. Rate and cost goes up quite a bit. So most of mine close with a 1 year prepay.
Especially in this market where we expect rates to, in the future, come down. If you have, here's just my thought on this question that some people might not have necessarily asked. If you buy the home, let's say in a, I don't know what the word is I'm looking for today. My vocabulary is slipping, but let's say you buy it at under market value and then you want to refi or get cash out, you will need to wait 6 months before It may even be a year depending on the lender before you can get to that new value.
Right. Credit minimum generally, 640 is, I think, what I've seen is the lowest. But
Yep.
when you're at 640, you're looking 30% down
Correct.
or more, right?
Yes.
So to be at 80% down or 20% down, you want to be 680 or better, if I remember correctly.
Right. Most of the lenders will be at 680. Some of them will want to be at 700. The ones at 700 obviously are going to be better priced than the others. But yeah, 680 and above for 80% LTV.
And then a 1 to 4 larger down payment as well, I would assume.
Right. Yeah, you're going to be looking at 30% down on that. But
Yeah.
The opportunity for cash flow in those, because they will need to, like a Fannie Freddie loan, they will need to be self-sufficient, much like this program requires anyway. But your opportunity to make money in those fourplexes is, I mean, it's staring you right in the face. So
Cool. Any other questions? I don't see anything in the chat. We try to keep these to 20-25 minutes because we're all busy folks trying to make a living out there. So I'm not one to, as you guys all know, I'm not one to have these linger on and with dead air space. So any final words, Brad?
no, well, yeah, my final words are, for realtors, I think this is a great opportunity to get some of those purchases if you can find the investors. They do close quickly. Don't hold your NEXA loan officer to always being 14 to 17 days on these, but they can close quickly if the borrowers are compliant, if the borrowers will get us what we need, if they'll get it up front, get it quickly, if we can get the appraisal in, these close routinely faster than a Fannie Freddie full doc loan. So if you're running short of those buyers, the first time home buyers or the move up, move down buyers, there are investors in every city that are looking for opportunities. If you can find your way into meeting them, these are a great opportunity for you to supplement your primary residence, first time home buyer, move up, move down, moving into the community type of thing. I think it's an underserved area as well because people just don't know what this is. But once you see how quickly they can be done, it's something you're going to want to do more and more because you can do twice as many transactions as you would ordinarily do with the standard full doc, brain damage loan. So,
and the reality is realtors themselves should really take advantage of it because
I think so too.
You generally have access to information before it gets on the market. So as a realtor, I always want to say that wrong. My apologies. As a realtor, you should want to take advantage of this. Trip put out there that DSCR borrowers could be located at the local Real Estate Investors Association. Thank you, Trip. And one last question from Raul. Can rental or investing experience be backed by someone else vouching for you somehow? I would say the quick answer to that is unless that someone is on the loan with you, the answer is going to be no.
Exactly.
That's there. And if I'm a lender and you bring me, my buddy Joe says, "Oh, this is a good dude," I'm not likely to take that.
And one caveat on this too, I did just have this come up and I didn't bring it up, but I'm glad I thought of it. First time home buyers, even if they're buying it as an investment, extremely, did I say extremely difficult? We do have a couple that'll do it. Very unappetizing. The rates are not going to be very good. It might even make it hard for them to qualify. So if you have somebody that has not bought their own primary residence, this could be difficult. Not impossible to do, but it is going to be more difficult. If they already own a home, second home, primary residence, if they've owned a home in the past 3 years, even if they're currently renting now, if they have owned in the past 3 years, they've at least shown that they've owned real estate, and this program will work for them.
Absolutely. All righty. We've come to the end. Mia, what are we talking about next week?
Oh, next week we won't be having Realtors Unplugged because we will be celebrating Independence Day tomorrow. So there is no LOS plugged in also tomorrow. Our Realtors Unplugged will be on the next week, and we'll be having commercial loans with Nancy Davis.
Awesome.
Oh,
All righty, folks. Thank you for your time, your presence here. Happy 4th to everybody. Stay safe. Try not to do anything stupid, as I like to say. Come back with all your fingers and toes, and we will see you all in a couple weeks. Thanks
yeah,
again,
whatever
Brad.
you do, be
Appreciate
good
your
or be
time.
good at it.
Yes. All righty.